Good morning, traders. It's 8 a.m. Chicago time on Thursday, the 28th of April, 2022. This is episode number 2222. Again, 2222. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Thanks for the sound check. This morning, looking at the pre-market summary sheet from Convergent Trading, we see that the indices are nice and blue, or at least a deep green. And so the sentiment is mild risk on in the overnight session. The market has traded quite a bit above yesterday's close. Let's see what's going on here with this. Okay. And so, we see the European markets pushing higher. We see the NASDAQ strong. Facebook came out pretty decent yesterday. And the earnings are really what are driving things right now. We're in the most intense week of earnings of the quarter. Pre-market, we had Comcast. I'm not going to go through these one by one. We had Comcast, we had Merck, Caterpillar. Again, these are all major players. Pretty much everybody beat except for Southwest Airlines. Southwest Airlines came in at a loss of 32 cents versus 30 cents, but it did beat its revenue number. The rest are beating pretty well, with MasterCard beating quite handily, $2.76 versus $2.17. So that's what's on deck. Twitter relatively strong this morning. Oh yeah, Twitter beat by 2,900%. Twitter came out, isn't that interesting? Came out at 90 cents per share. Versus estimated 3 cents per share. That kind of brings into question why Elon Musk is all of a sudden wanting to buy it. Looks like it's finally profitable. That's on $1.201 billion of revenue. Relatively small revenue, actually. After the market, we have Amazon and Apple. Those are the titans, the monsters. And then we have Intel, Gilead, U.S. Steel, and many others after the close. Again, earnings driving movement. U.S. GDP Q1 advance came out this morning, and it missed quite a bit. GDP growth rate Q on Q advance Q1 was expected at 1.1%, came in at negative 1.4%. That's a swing on Q1 GDP of negative 2.5%. That's massive. And the price index came in at 8% versus 7.3%. So both of those were just way off. Initial claims came in line with expectations at 180,000. Core PCE came in at 5.2 versus 5.8. PCE prices Q on Q. 7% versus 6.9, and so on and so on and so forth. You can look up the rest. Coming into the session today, what's scheduled: ECB's McCall and ECB's Elderson. Then we get the natural gas, and then we have some bill and note auctions in the U.S. That's what's on deck. Looking at the S&P, turning our attention to the S&P, 239,000. 239,000 contracts traded. The inventory is 100% long. We've basically rallied since the close yesterday, and we have not looked back. Yesterday's close was basically, yesterday's settlement was the same price as the open. So yesterday's trade was completely refuted by buyers and sellers, returning to the open and finishing there. What was a double distribution profile in the ES. Again, 100% long inventory, and the range is really good, 58.25 points, expecting today to be quite active. Point of control, 42, 41.25. and the low of 4,250, which coincides with our over-under line for this session. That's what we have for today. A quick look at yesterday's action. I want to just bring this up here real quick and have you observe just what's going on and kind of stepping back again. I'll remind you, this is on Edge Pro X. The orange is overnight action, and blue, a lot shorter time, a lot thinner, is RTH. Okay, so this is RTH. That's a heck of a T there. RTH. And so just as you follow along, you can see that last week's low was right here. This was Friday, right here. And all we did is we came in on Monday. We tested that low overnight, held below the low. And then on Monday, we pushed and finished quite strong with a point of control at the high into the prior week's low and above the prior week's settlement. And then we proceeded to fall off, and we traded down from there. On Tuesday, we went sideways basically on Wednesday. We put in a lower low on Wednesday. See that? Lower low, lower high on Wednesday. And then today we are relatively strong in the overnight session, but we still remain below last week's low. So overall, to me, it just seems like the market is having a hard time holding on to higher prices. I expect that to continue. And as you can see here, a lot of volume up here. Remember, 4460 is important up here. A lot of volume up here. And then we broke below the 4350 where it got thin. And we are stuck in this thin area and building kind of a distribution down here at 4220. So this morning here, we're trading at 4230. And it just seems to me like it's likely to continue to be quite murky in this region, both for the ES, the NQ, but also for the Russell, the Dow, and so on. The market is in a holding pattern in a wide two-sided range with sellers mainly prevailing. So it's not an easy trade. It has not been an easy trade. Excuse me. This chart here is the relative delta for today. So you can see that yesterday, the relative delta was mainly positive until the end of the day where it sold off. And a lot of that sell-off was this very large volume. The large lots, which are 10 lots to 99 lots, were mostly sellers. The small lots were mostly buyers, but overall, it just seems like there's completely sideways kind of two-way aggression going on here. This is so far today. So far today, it didn't go very far, but the delta has been positive. Then it pulled back on the European Open, even though the European Open was strong. And it went back to even. We're trading with a delta of plus 122 right now using MBO data for the full session. And what that's essentially saying is the aggressors have canceled themselves out. The aggressor buyers and sellers have canceled themselves out. The thing to note is that very large lots have been actively buying so far. Sold off a little bit on the really crappy GDP number. You could see some selling on the very large lot side. But overall, Delta's quite sideways. These are all kind of, these are things, they're not major pieces, but they are supporting pieces that feed into the narrative that we are likely to be relatively choppy into today. And that's my point. Let's take a look at the TPO chart. So here's Friday. This is the week's low right here. This is the week's close or settlement. And then Monday comes in. We had a perfectly balanced day, and then we broke higher. We squeezed higher on the close. Then we refuted that on Tuesday by coming down, and then remember that 42.50 short to 42.07, that big trade on Tuesday, that worked out all the way down to 41.70 basically. And what we did yesterday, if you look at the gray area of the profile, that's the value area, we've basically had an overlap of value yesterday with an overlap of the point of control. So to me, again, this is an indication that despite a lot of effort, the market is not able to hold on to these higher prices. And that's what it's saying to me. It's really trading on an overlap basis until we have a strong break directionally that has weak rotations. So weak rotations down, then it's pretty much stuck in this 42.20 area. So just keep that in mind. Keep that in mind that that the overall picture is we are one time framing down. We're putting in lower highs. You know, the high was way up here. Lower highs, lower highs. And this morning we are trying to challenge yesterday's high, which was 42.36 and a quarter. We're trying to challenge that. We took that out in the overnight session. We held higher in the overnight session, and we're trying our darndest to do what we need to do to maintain. We are currently trading right at yesterday's value high, right here. This white tab right there. That's where the market currently is in real time. Well, 7 seconds delayed, but we are holding on to the top end of the range, and it looks like it is likely to pop. And what that's likely to do is give us a lot of support for a rotation higher over the next day or two. Remember, next week is the FOMC, major news there, and I believe that today we're going to use yesterday and the day before as a base of support. So my overall perspective, and I'm really tired today, and I want to end this Trader Bite as quickly as possible. Not going to do any scenarios this morning, but the overall picture for today, my overall sentiment is we are likely to push higher today. We are likely to go and clean up this 42.34 tail. We're likely to take this out and push higher. We're likely to clean up here. The expectation is from 42.29 on the open or thereabouts, 42.30 or so, we are likely to push ourselves back higher, back above where we settled on Friday. And this is really annoying how it doesn't adjust to settlement by itself. So to me, I think we're leaving a lot of the auction that we've had for Monday, Tuesday, Wednesday behind starting today. And it's likely to do it in a very choppy fashion. So look out for, as the market pushes higher, look out for the market for sellers to come in and splash it down. This is the structure that I'm seeing currently. Looking at the bigger picture here, let's bring in the rest of it. You can see that we have done a good job building a distribution. If we take out this 42, call it 35, 36 area, we have a pretty good thin area to trade from last Friday to take it all the way back to 43.60. We can see that 44.60 is really the big number, but in market profile, in a time-based chart, it's 44.20 or so, 44.30. But you can see that there may be enough fuel here to propel us up this thin portion into the next bigger distribution above. Okay, so that's what I'm thinking. This is what the market is setting up to do. If I'm wrong, then it'll be the exact same trade as what we set out on Monday. If I'm wrong, it comes back to the value high, which is where we are currently. It breaks through. It has a hard time pushing through the 42.30, and it starts to walk itself across the entire value range and pushes itself down into the 41.85 or so, and then targets settlement. The settlement price at 41.80. That'll be the target to the downside. Anyway, I'll leave you with that. Good luck today, and I'll catch you tomorrow morning. If you did not watch the Futures Radio Show yesterday, it was a lot of fun. Really good stories from Pax and Earl Counter and Anthony Crudele. That was a lot of fun to learn from these just 20, 25, 30-year veterans of trading. I'd encourage you to listen to that. You can find that at edgeclear.com/deli, DELLI. Again, edgeclear.com/deli. Take care.